doing well. Hope everybody had a great weekend. We're going to talk about a lot of stuff related to the precious metals today, but first, I want to cover this potential for a pullback in the price of gold and silver. And this is something that we've been talking about on this channel for some time now, a week or two. I feel like we've had a big run up in the price of precious metals over the past several months, and there are some signs out there that we still have some possibility of a significant pullback in the price of both gold and also in silver. And in today's video, I'm going to share with you some of those indicators and some of the things I'm looking at and what this means for us. Because, this doesn't mean that we want to stay away from the precious metals, not at all, but it might inform how we make some decisions moving forward as stackers. And I think that, where we are at in terms of stacking is going to impact how we let this possibility of a pullback in the price of gold and silver affect us. And I'm going to go over, what I think this means for us. Now, to kind of lay the groundwork, we're going to take a look at a chart of the price of gold. Before I do that, I just want to say thanks for joining the live stream. Thanks for tuning in. Please smash that like button. If you haven't subscribed to the channel yet, please do that. And let us know what you're thinking in the chat. Please do say hello, and I will do my best to get to anything I see in the chat that is pertinent. Now, to start us off, let's take a look here at this price of gold, this chart, because there's been some pretty interesting action in the price of gold lately. Now, I could zoom out to the weekly chart, but I kind of want to look at the daily to get an idea of some of this price action. So you can see today we're in the green, but really it was last week that I want to draw your attention to. On Thursday, we had this big run up in the price of gold. In fact, it touched near record highs. We had it getting up to close to $2,060. Silver was up over 26 bucks on Thursday, but then on Friday, we got this significant drop off in the price of gold, a big pullback. And the trigger for this, it was a couple things, but big one seemed to be the non-farm payroll report that came out. It was better than expected, and surprise, surprise, we got this good news is bad news dynamic taking hold in the markets, and we saw the price of precious metals sell off. Now, the idea here is that if there's more jobs than were expected, if the economy is stronger than expected, then that means that the Fed is going to be able to keep rates higher for longer. And then, it's this dynamic where it's not really any of the fundamentals that are driving the price of the metals. It's just the anticipation of what the Fed is going to do. Since we saw that decline in the price of gold, we have seen the price swing back up. It's recovered quite a bit. I'm not so sure that that pullback was the big one, though. I mean, I've been warning about a potential pullback in the price of gold and silver for a couple weeks now, and I don't know, that $40 or so drop, I'm just not sure, because there are some other factors I want to take a look at here. One being the commitment of traders chart. Now, I'm going to pull this up from cotpricecharts.com. This is the chart of silver, and what this represents is the lines on the bottom there are the commercial short positions. The blue line up top is the large speculative traders. You can see the higher above this center line that blue bar goes, the more long positions there are, and the lower this red bar drops, the more short positions there are. Now, typically, when you start to see it at extremes like this, where you have a lot of short positions among the commercial traders and a lot of long positions among the large speculative traders, the commercial traders typically are the smart money. So when you get this many short positions among the smart money, you have to start considering the fact that you might see a pullback in the price of the metals. And this is a fairly extreme reading here. So this just basically means that the price of silver is a little bit overbought at current levels. Now, it is important to indicate that this data is from last week. It's from last Tuesday. So the data gets accumulated on Tuesday and then it gets published on Friday. So this really doesn't take into account that big pullback that we saw on Friday. But as I've noted, we've already kind of recovered from that. And it's a very similar story in gold. We see that gold also at fairly extreme readings here, indicating that the gold price may be a little bit overbought. And when you look at like a 6 month chart of gold, this doesn't come as any surprise. Gold has had a huge run up over the past 6 months. And so it is very possible that we could see a pullback here. And, I'm not saying that we're going to see a big decline in the price of gold in the long term. I'm very bullish in the long term. But the reason that I think it's important to pay attention to this market action and to the fact that we've gotten a little bit overbought in the precious metals, two reasons. Two reasons. One is that if we are seasoned stackers, individuals who have already accumulated a fair amount of precious metals, this should give us some cause to be somewhat circumspect here because, assuming you already have some kind of a position in the metals, like just in case, it's probably a good idea to wait for pullbacks to be able to buy at lower prices and to kind of dollar cost average into things. And I think that right now we may be on the verge of a potential pullback. Now, the other thing I want to say is that, if you're somebody who has never stacked precious metals or you have a very small position in the precious metals, I wouldn't be too worried about the potential for a pullback because there's also the possibility, at any moment now, we could have an event which would drive the price of gold and silver much, much higher. Commitment of traders charts could be completely unimportant. If we see, for example, Saudi Arabia reprice their oil sales in Chinese yuan or gold or some other non-dollar currency, and we see the petrodollar begin to take a serious battering or just disappear, that could cause the price of gold and silver to go sky high. If we see Russia use a tactical nuclear weapon in Ukraine, or if we see Taiwan become a hotspot and open conflict break out there, or if we see a banking collapse in the US, that is looking like an event that is more and more possible. Maybe not likely, but a complete collapse of the banking system, to say that that's not in the cards, not a potential outcome of what we have been witnessing over the past months and even more recently in the past couple of weeks, it is possible. It is a possibility, but it's not, necessarily likely. The fact that we could have more banks fail doesn't mean we're going to get a systemic bank failure. But if we do, we could see the price of precious metals take off like a rocket. And that's why I think if you don't have a significant position in the precious metals, and mind you, none of this is advice. I'm just kind of sharing my thoughts on what I think this pullback could mean. But if you don't have any metals, I wouldn't be too worried about, a potential 10 or 20% drop in gold or silver. I would just want to get my hands on some physical metal because I think that the risk of getting caught with no metals and seeing, the financial system fall apart, it's a very real risk these days. And so that's kind of my thoughts there. But if you are a stacker, and I think a lot of folks watching, already have a position, you might want to keep an eye out for some deals over the next couple of weeks. And, there is a possibility that we could see a pretty good pullback. Now, as far as what I will be stacking if we do get this pullback, because again, in the long term, I'm very bullish on the price of precious metals, and I think a pullback will just be a buying opportunity, a great time to lower dollar cost average and scoop up some metals on a discount. Right now, the thing that's kind of in my crosshairs, SD Bullion is having this sale on these 5-ounce silver bars, the Ital Preciosi. I have one of their kilo bars, which I think is a pretty nice one, and $349 over spot. Now you got to order several of them to get that pricing, but even at the lower unit pricing, I think these represent a pretty good deal. We had recently the Britannias were on sale for about $399 over spot, so even a slightly better deal on these. Although you do have to get some volume. What do you think about 5-ounce bars? I have a couple in my stack. I don't have many though. I mostly have the 10 and 20-ounce bars. I've got this one from Northwest Territorial Mint, and I do have a 5-ounce Liberty Bell bar from SD Bullion, but that's always been kind of, I don't know, the redheaded stepchild, so to speak, of the bars in my mind, a 5-ounce, because sometimes it's nice to have multiples of 10. I don't know, it's just kind of my thinking on it, but if they're on sale, silver is silver, so if you can get a 5-ounce bar cheaper than a 10-ounce bar, why not? That just makes sense. The other thing I'll be taking a look at is some Goldbacks. If you caught my interview with Jeremy Corden, the CEO of Goldback Inc., I was rewatching that as I was editing it after having the conversation with him, and that kind of made me want to get some more Goldbacks into my stack. They did just come out with these Wyoming Goldback notes. So that's the newest state. And I was talking to him, and he tells us that it sounded like from what he was saying, South Dakota is probably going to be next in line, and then possibly even Texas. You kind of got to read between the lines of what he was telling us in that interview, but that's kind of what that sounded like. And I've got a link to Alpine Gold Exchange down in the description. You can use that if you want to get the best price on Goldbacks. And it's kind of interesting because I was shopping around and I was looking at SD Bullion, and I know they sell Goldbacks too, and kind of an interesting pricing situation the way it is right now. I mean, you really got to shop around. I was looking at SD Bullion, and they actually have the better deal on these 50 Goldback notes, whereas at Alpine Gold Exchange, that's where they have the best deals on the one Goldback notes, which kind of interesting. When obviously you want to buy them where they're, you get the best deal. But if you go to SD Bullion, a one Goldback note like this one on the right here is going to cost you something like $5. But if you go to Alpine Gold Exchange, you can get them for $3.89 right now, I think. But then these were $100 and $190 or something like that. These 50 Goldback notes over at Alpine Gold Exchange, but SD Bullion had them for under 190. So anyway, just shows you got to shop around. Constitutional Stacker says Goldbacks are sweet, but it's not a great deal. Yeah, I've always. Oh, sorry, I'm kicking my camera here, guys. You know me, I'm kind of a Luddite when it comes to technology and stuff. Sorry about that. Okay, the thing about the Goldbacks is they've really performed very well over the past couple of years relative to the price of gold. I mean, I know there's that high premium, but there is that utility value. Go check out that interview I did with Jeremy Corden, the Goldback CEO, over the weekend if you haven't seen that yet. Because I've always kind of liked Goldbacks. I think they're neat, but I did have my reservations because of the high premiums. I'm obviously not gonna go liquidate all of my coins and stuff to get some Goldbacks, but I do think there's something to be said for these. And if you want to check out Alpine Gold Exchange, they're the best place where you can get the one Goldback note. They have the best price on these one Goldback notes that I've seen, and it's very interesting that you can get these one Goldback notes for about $3.89 over there. I was looking on eBay, and it seems like these things are regularly selling for like $5 or $6 on eBay. So it's crazy to me that there's that big of a difference between markets. But I mean, if you look on eBay at sold listings, these things are going for maybe $5 or $6 a piece on a regular basis. And then at Alpine Gold Exchange, you get them for $3.89. So it seems like a pretty solid deal to me. One thing I was wondering about, maybe you can help shed some light on this for me. You can put it in the chat or in the comments if you're watching this later. Is I was wondering, what's better to stack, the one Goldback note or the 50 Goldback notes? Which one is the best one? And it seems to me that the default position for this, for me, would be to go with the one Goldback notes. These. Just get a bunch of these. Don't bother with the larger ones because after all, the primary utility of a Goldback is that it is super fractional, right? Super small denominations of gold. And the one Goldback note is the most divisible. It's the smallest denomination. So if you're going to pay the same price per individual, unit of Goldback, why not get the small one? But then I thought, well, wait, what if they only make a few of the big ones because these things are in much bigger demand? So, as far as like collectible value goes, maybe those large 50 Goldback notes that have, by the way, 1/20th of an ounce of gold. So, I mean, this right here is like half of a 1/10 ounce gold eagle. That's pretty interesting if you think about it. But, maybe they don't make so many of these because a lot of people are thinking the same way I am, that the small ones are the way to go. It would be interesting to see the mintage numbers from Goldback as to how many of these they're making. And I think Jeremy actually mentioned that in the interview, that on the subreddit for Goldbacks, somebody had mentioned that they need to come out with like a mintage page. So if anybody has any information about the mintage, let me know. And also let me know what your thoughts are. Do you want to go with the bigger Goldback notes? Do you want to go with the smaller ones? What's the best way to go? Cranky Stacker says, are there Silverbacks? Yeah, there are Silverbacks. It's actually, they're pretty cool. You can see them in the collectible sections of goldback.com. That was actually a thing where Silver Dragons, shout out to Silver Dragons, he's got an awesome YouTube channel. Always like to watch his stuff. He partnered up with Goldback and they made a collectible Silverback, but they have 1/1000th of an ounce of silver in them. So, I mean, they're worth like, what is that? Worth like 2.5 cents or something like that. I mean, they're cool though. They're kind of a cool collectible. And yeah, Constitutional Stacker says rip off. Like, it's not really a rip off. it's just, they're not being sold as a bullion product. They're a collectible. So, don't buy them if you want to get weight. If you're, just stacking, obviously that's not the thing to do. But, they're kind of cool. They're a collectible. If you like silver, I mean, I think that the point that Jeremy raised is that he thinks that someday it's possible for gold and silver to achieve parity. Now, I mean, that's a pretty bullish call for silver to say the gold to silver ratio go to 1 to 1. I don't tend to get that extreme. I think it is possible with all the industrial uses for silver and all that stuff. Um, it's possible that we could see something like parity for gold and silver. Probably a lot more likely that it'll go down to say like a 20 to 1 ratio or something like that. I mean, that seems well within the realm of possibilities, given the scarcity of silver and the deficits in silver. Um, but anyway, the idea is, I guess, if they reach parity, then maybe a goldback would become, or rather, a silverback would become more of a viable thing. If silver goes to $1,000 an ounce, well, now all of a sudden, the silverback kind of makes sense. It'd be like $1 a piece. But at current price levels, they're just kind of a novelty item. But it was a cool partnership between, and they look really cool. They've got a big dragon on them. Can't make food while Smart Silver Stacker's on. Yeah, thanks, Constitutional Stacker. Appreciate you always tuning into the live streams. Now, so that's pretty much all I had to say about the pullback in the price of gold and silver. It seems like we need to be a little circumspect here. It was very interesting that on Friday when we saw that big pullback, the $2,000 level for gold held. So maybe I was mistaken. Maybe that's going to be the only pullback we see, and maybe gold is now has a new floor put in of $2,000. I'm not really sure, although I am keeping some powder dry for a potential pullback. Now, here's one reason that we might not see the price of gold drop too much, and that is this de-dollarization trend, which continues. This is a story from Market Insider. De-dollarization efforts see China expand its gold reserves for 6 straight months. So they recently reported another addition to China's official gold holdings. That's the 6th month in a row that they've done that. The new levels, let's see if we can scroll past these ads here, 2,076 tons. That's the new level of China's official gold reserves. So there continues to be significant demand for precious metals by central banks around the world. Internationally, banks added 228.4 tons of gold in the first quarter. So central banks continuing to stack lots of gold. Let's see. Constitutional Stacker says he's taken a buddy of his to get his first precious metals. Hey, you're doing good work there, Constitutional Stacker. If you are spreading the word about precious metals and you're getting some more folks to get into precious metals, I think that is you're doing them a favor. Let's put it that way. And that's another thing that goldbacks are kind of nice for is it's not likely you're going to go out and give a waiter a tip unless it's a very expensive meal in the form of a gold coin. But next time you're at the bar or a restaurant or whatever, what have you, you're leaving someone gratuity. Maybe you throw them a gold back on top of some cash. Don't just give them gold back. Don't make them think you're some kind of a loon. They're probably going to want some fiat currency because they got bills to pay. But hey, maybe a goldback thrown on top could change that person's life. If they start doing a little research into hard money and sound money, you never know. Goldbacks are a very cool implement for that. You get a stack of one goldback notes. They're worth about $3.89 a piece. You can give them as gifts. They still do have that novelty thing. Now, Jeremy in that interview, he was telling us that, they are for kind of hardcore stackers too, and he's converted all his gold coins into goldbacks. I'm not going that far, but I do think that they're not just novelty. They are a good thing to have on hand. And, they have this significant potential to appreciate in a very big way. Okay, so China is de-dollarizing. They're stacking gold. If we get a pullback, I'm going to be stacking gold. Also in de-dollarization, I thought this was an interesting story out of Bloomberg. China takes the yuan global in a bid to repel a weaponized dollar. And the thing I really wanted to draw your attention to is this chart here, which shows the use of Chinese yuan or the renminbi in the Russian economy. So the white dot on the left there, that's right over here, that represents pre-Ukraine invasion. Moving all over the place. And then the blue dot there is now. So you can see that in terms of their share of exports, their share of imports, their share of Forex deposits, and their share of Forex trading volume have all moved up drastically in terms of percentage. They're pricing a lot more of their bilateral trade with China in the yuan, and the fact now that the yuan has taken over, looks like almost 40% of their forex trading volume, and that is up from under 10%. So we are seeing significant inroads for the yuan. Of course, I mean, that's Russia. They've been basically cut off from the dollar entirely, so they don't have much choice in the matter. But that's kind of the whole point, right? Is that the dollar has been weaponized now, and so that is causing nations around the world to want to get into gold, into precious metals, and to limit their exposure to dollars. Uh, Jeff says, "Wow, Alpine Gold's prices for Goldbacks is so much less expensive than buying them on eBay." Yeah, it's really amazing. I mean, if you go even to a lot of the dealers for these single Goldback notes, which are the ones I kind of lean towards, they're priced kind of high. Now, like I said, if you want to get a 50 Goldback note, I noticed that SD Bullion actually has the best prices on these. So you got to shop around, but there's a link in the description of this video to Alpine Gold Exchange, and they have the best prices for the single notes. So check that out if you're in the market for some Goldbacks. Now, the other thing I want to talk about today before we wrap this up is the debt ceiling. So we've got this article here from Reuters, came out earlier today. Global markets, shares rise, dollar slips ahead of U.S. inflation data. Yeah, we're going to be getting the CPI data for April later this week. That is going to be very interesting. I don't know. I mean, it was 5% year over year last month, so I don't know if we're going to get under 5%. We could see a tip up in the price, rather in the CPI, because, I don't know, it seems like prices aren't falling to me, and we've got all these factors. You have the international supply chains continuing to be disrupted. We have local supply chains replacing global ones. Kind of touches on this in this article, but deglobalization is going to be a factor driving up the CPI. And so I do think that we are still far, far away from the Fed's 2% target. But this article also touched on the debt ceiling, $31.4 trillion U.S. debt ceiling. Of course, we heard from Janet Yellen last week that now we're getting much closer to hitting that debt ceiling than previously expected because tax receipts in the U.S. are lower than expected. I mean, basically what's happened is that the economy has been so gutted by, this manipulation by the Federal Reserve, by all of the malinvestment, by all of the bailouts, by the refusal of the powers that be to allow the free market to do its thing and correct these imbalances in the economy. Every time that we get some kind of economic pain, they come in and intervene. And so now tax receipts are declining because the economy is weakening. That's what happens when the economy weakens. Tax receipts decline. So they're going to hit this sooner than they previously expected. And there was a quote here I thought was interesting. Unfortunately, it's probably market turmoil that's going to create the political cover for Biden and McCarthy to come up with some kind of a deal, said Jack Ablin, not sure how to say his name, but he's the chief investment officer and founding partner at Crescent Wealth Partners. And I wanted to comment on that because, if it's not the market turmoil, the fact that the U.S. banking system is collapsing, it's falling apart, that gives them the cover to raise the debt ceiling, it's going to be something. I mean, it seems extremely unlikely that they're not going to raise the debt ceiling. I mean, obviously, I don't have a crystal ball. I don't know anything for sure. But I would be absolutely flabbergasted and shocked if they don't raise the debt ceiling, because the bottom line is both parties like to spend a lot of money, and they both sides of the aisle, the politicians want to get reelected. And so, if they don't raise the debt ceiling and we get some kind of a default, we're already on the verge of economic collapse. I mean, it could get pretty ugly. Now, it's going to get ugly in the long run, one way or the other. I mean, if they raise the debt ceiling, it's just kicking the can down the road. But they are going to raise it. I'm almost sure. And, that's a sign that inflation is going to get a lot worse because, hey, they want to keep spending that money, right? So anyway, I do think that they will raise it. But I also want to comment on this plan. I'm sure some of you have heard it discussed. I mean, it's in the mainstream financial media, this $1 trillion platinum coin. So I've got a 1-ounce platinum eagle here. It's got a $100 face value. Of course, it's worth about $1,000, maybe a little more. I think maybe $1,100 these days. But still, it's not worth anywhere near $1 trillion. But the brilliant plan here that some have kicked about, and to the Janet Yellen's credit, I mean, she even dismissed this idea as nonsense. But this idea keeps getting kicked around that you can create at the Treasury coin a $1 trillion coin, and they say it would be platinum, a 1 ounce platinum coin with a $1 trillion face value, and then you can give that to the Fed as collateral for $1 trillion. Well, this is one thing that Janet Yellen and I actually agree on, and that's that this idea is ludicrous. I mean, there's no way that this would ever work. And I just want to comment that, okay, think about what this plan would mean. You mint a platinum coin, you give it from the Treasury to the Fed as collateral. The Fed gives the Treasury $1 trillion. Okay, now all the bills can get paid, right? And I mean, ostensibly, I guess if it works for 1 trillion, why not just print $100 trillion coin, right? Or mint it rather, or why not make it $31.7 trillion coin? And that way they could pay off the whole debt. Well, here's the reason. Here's the reason this will never work, and they will never do it because it would create massive inflation. I mean, it would completely undermine the dollar. And here's why. I mean, this would be the same thing as if, let's say, this were to happen. And this is something that might actually play out, that is kind of a similar idea. But you could have the Fed create, say, $31.7 trillion in 0% interest, non-yielding U.S. treasuries with, let's say, a 100-year time horizon. So a 100-year bond at 0% interest, and the Fed could just buy those, right? I mean, it would be like QE ultimatum, and eventually we may get to something like that. But that at least would make more sense than the platinum coin. I mean, and the platinum coin idea is no different than if the Fed were to do that with treasuries. If they were to make, several $1 trillion in non-yielding treasuries, give those to the Fed puts them on their balance sheet, the Fed gives the Treasury cash. I mean, if that were to happen, it would kill the dollar overnight, because it would completely reveal the banana republic nature of our financial system. It would just be debt monetization on a massive scale. And that's exactly what creating a $1 trillion platinum coin would do. And never mind that, the $1 trillion platinum coin would still only really be worth $1,100, same as this coin right here. I don't know, maybe if they do that, maybe I'll be a trillionaire because I have a platinum coin. I mean, it's such a ludicrous idea. And the idea that you can fix these economic problems with this, magical type of solutions. I've always said that, it's akin to how the politicians think that they're wizards, or people treat them like they're wizards. I mean, think about it. These guys dress up, they go into a room, they take their scrolls and they write words on them with paper, and then they all get together and they say some incantations and they hold up their hands and they vote, and they think that that can fix the economic problems, as if, the economic reality in the country can be subverted by signing some people's names to a piece of paper. I mean, that's the idea. But anyway, Daysong says, I'm kind of bored of this conversation, honestly. It's good info just that it's repeated so many times. Gonna go watch a video about pirates in the metric system. Okay, well, enjoy your pirates. I mean, hey, listen, pirates like booty just as much as stackers, right? Pirates are kind of like the original stackers, so I like pirates. They're cool. What is it that Elon Musk likes? He likes those pirate shanty songs. They're kind of fun too if you need something to coordinate your efforts on a ship with, I guess. Anyway, yeah, what did you think the video is going to be about when you clicked on it? Well, yeah, surprise, surprise, we're talking about gold and silver again today. Anyway, that pretty much wraps up the discussion for today. I'm going at about 30 minutes. I do appreciate all of you joining me today. It's always fun to chat with you and to interact. Thank you all very much for tuning in today. And, keep an eye out for that pullback. Warboss says, America is boned, ain't it? Well, I don't know. I mean, I'm an American, and I like to think I'm a patriotic American, but patriotism doesn't mean just saying rah, 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 everything's great. Real patriotism is when you see your country driving towards a brick wall, try to sound the alarm, hit the horn, and hit the brakes, right? That's kind of how I view it. I think it was Mark Twain who said that, at first, a patriot is a scorned man. And I don't have the rest of that quote in front of me. And I don't know, with quotes these days, it seems like nobody actually said, what we believe they said. But anyway, yeah, I hope America's not boned. I hope that we get it together. But it seems like we might have some difficult times ahead of us. In fact, I think that's kind of guaranteed before we do. Anyway, thanks for watching, everybody. Stay safe and happy stacking, and I will catch you very soon. We'll do more live streams just like this one. Thanks for watching, everybody. Smart Silver Stacker, Out.